I've been trying to help you develop your frameworks and understanding. I still see the panic that rolls around. I understand. All of our wealth is in this trade. Mine too. I'm no different to you guys. But you can't panic on every 5% pullback.
Bitcoinzilla stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoinzilla today and enjoy the new edge. In this video, Raoul Pal discusses culture, crypto, the banana zone, the everything code, lifestyle chips, and our big picture outlook at Real Vision.
Is this going to be top? Somebody posts something on Twitter. Oh my God, it's all over. I put a poll out. My mind is fucking blown. I put a poll out saying, what do you think is the peak of the cycle? 65% of people think the cycle peaks at 150,000 Bitcoin. Maybe I'm wrong, but that sounds like PTSD to me. It sounds crazy considering what's happening in US politics, regulation. It sounds crazy when all the liquidity still lies ahead. It would be ridiculous versus any other cycle. But I could be wrong. I've been wrong in the past. I'll be wrong again in the future. But I can see the PTSD and the fear because it matters so much to everybody. And as we go into next year, I will be trying to guide you on just taking some goddamn lifestyle chips off the table. I don't know when the right time is. And you'll be panicking because the market will fall 20%. You're like, oh my God, I've missed the opportunity. You haven't. I mean, the market's up so much from when most of you guys bought it. But we'll take some lifestyle chips off and you guys can then calm down. I know it's important to everybody. I know this is the biggest bet everybody's ever taken in their entire careers. And if it isn't, I don't know what's wrong with you because this is the greatest opportunity of all time. But the banana zone will help us. The banana zone will move to the banana singularity when everything goes up at the same time. And then you'll take some money off the table and you will hate doing it, but you will thank me at some point. And then we'll figure out the rest of the cycle as we go. What happened as soon as Trump got in is he said, we don't want a strong dollar, and rightly so. I think they'll say that again. And the dollar weakened and rates went down for the entire next year. Even though the Fed were raising rates in 2027, the long end was going down in yield. That setup is likely to happen again. So we're getting into this perfect setup that whatever the correction is, things will rally. Now, it was Bitcoin that had the bigger sell-off. Other things like ETH sold off less and then rallied back in that period. So we don't know what happens. Let's zoom in here on the chart of Bitcoin. There it is, the Trump victory, this rally in Bitcoin, the correction, and then it did 23x. Yeah, 23x. Are we going to do 23x? Absolutely not. Are we going to do 5x from here? I don't know, probably. You know, my base case is 250 worse, 500 plus in a blow-up top market.
Michael Saylor, chairman of Microstrategy business intelligence firm, dropped his usual post on X. The message reflects Saylor's bullish disposition to Bitcoin regardless of market dynamics. As the current price rapidly declines, Saylor has ignored the gloom and issued a notable message to Bitcoin investors. Saylor issued a forward statement, "Wear a hard hat." The Bitcoin enthusiast attached an image of himself in an orange hard hat, inscribed with Bitcoin and a vest. Behind him are screens of market activities as traders stare at what might be an ongoing gloomy market run. Despite the tense atmosphere, Saylor maintains that investors must wear a hard hat as the market suffers, which could be a momentary crash. Notably, workers stay safe on a construction site by wearing a hard hat to protect themselves from crashing objects. Saylor appears to have the same advice for Bitcoin investors to protect themselves. Analysts suggest that investors could use stop-loss orders, hedge with derivatives, or monitor market sentiments in a crashing market. However, the Bitcoin advocate would rather stay calm and stick to his Bitcoin accumulation plan for Saylor. Saylor continues to stick to his massive accumulation strategy on Bitcoin regardless of price. When Bitcoin hit $100,700 after suffering a momentary dip, Saylor rejected the idea of selling for profit-taking in an interview. He maintained that the Bitcoin community would never trust MicroStrategy should it decide to sell BTC. This highlights Saylor's and MicroStrategy's holding strategy. Meanwhile, Saylor has hinted at changing MicroStrategy's fundraising approach to add more intelligent leverage. Having achieved targets faster than anticipated, Saylor says the company will continue to raise capital primarily via fixed-income markets. He believes the company needs more leverage to compensate for its increasing deleveraged position.
So, each time we've had these kind of transitions into the new government, we have this breakout, and that should continue higher. Don't see why this can't go 200,000 plus. I mean, it would look pretty basic on this chart, even if we have a law of diminishing returns in the Bitcoin cycle. So for me, it feels good. If I look at the global M2, which is another way of measuring liquidity, look, every time we get to election year, you have this tightening of liquidity. We had it in 2016, and then 17 it expanded. We saw it in 2020. Then it expanded, and now we've got it again. It kind of retests the breakout and keeps going. Global liquidity is actually driven by the dollar. So it is going to be about the dollar, and things can change, and I could be wrong. So the dollar is the main thing. The dollar last time has been following the 2017 election cycle really well, 2016, 17, and it should say this last leg in the dollar, next few days and stuff, should be the end of the dollar rally, and then that will ease up global M2. We know the Chinese have to start stimulating, but they can't do it with the dollar so strong because they don't want to weaken their currency too much. So they need the US in the game. Everybody knows the game. They all understand the game. It's just a matter of timing. So be patient. We've got the liquidity of the Treasury General account coming and the reverse repo and the end of QT. That's all coming. We've got potentially and hopefully a weaker dollar. That's to come. We should see rates come lower because expectations now for only 2 rate rises, rate cuts all of next year. Well, anything that produces weaker data will produce more rate cuts. So we've got a perfect storm coming up, and that's the banana zone thesis. Is this the start of the big correction, or is this a quick shakeout so you people can't hold on to your coins into year end when we get a rally? I mean, the last 2 election cycles, we finished the end of the year with a big rally. I don't see why this is different. So I'd be careful, not of the market correction. We should expect that part of don't fuck this up. Is expect 30% corrections frequently. But please don't think about, well, I need to hedge this, close my tokens, buy them lower, blah, 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 blah. You should be prepared to accept the volatility because that's what gives you the gains. If not, you might well be chasing it into year end. By the time you chase it all get long, into, let's say, January 6th, then the market reverses. Just don't get involved in that. Your job is to hold. To own your tokens, don't trade, don't use leverage, just do nothing.
Bitcoin experienced a sharp decline, falling to $94,000 from its peak of over $100,000. As the market struggles with a change in momentum, a retracement is looming on the horizon. Although some people may find the price correction concerning, there are important trends and dynamics to keep an eye on that suggest what Bitcoin may do next. The short-term rising trend line that supported Bitcoin during its most recent rally is broken below on the chart. This breakdown implies that short-term bullish momentum is waning. The psychological level of $90,000 and the 50 EMA at $91,798 are the next significant support levels to keep an eye on. If buyers take action, these levels might serve as a buffer against additional drops. The last few sessions have seen a noticeable increase in selling pressure, according to volume analysis. But the RSI, which is at 43 right now, shows that Bitcoin is getting close to oversold territory. Bulls can regroup during this dynamic, which frequently occurs before a possible relief rally or consolidation period. The larger picture shows that Bitcoin is still above its 100 EMA, $82,971, which has historically served as a solid support level during market downturns. The entire bullish structure will continue to exist as long as this level is maintained. Rebounding above $97,000 would indicate a resurgence and potentially spark a new rally. Looking ahead, Bitcoin's trajectory will depend on the market's capacity to maintain important support levels. Should selling pressure persist, the $85,000 zone may be tested by more severe correction. Bitcoin might, however, stabilize and try to recover $100,000 if buyers regain control, indicating a resurgence of market confidence. And do not forget to subscribe to Bitcoin Saylor. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.